Last year, we owned one commercial property. Land tax was around $4,000, and under the lease, the tenant covered it. No issues. This year, we bought a second commercial property. The first property didn't suddenly double in value. Same land, same location, same tenant. Only small movement, if any. But the land tax didn't increase slightly. It jumped to about $31,000. Why? Because in WA, land tax is calculated using aggregation, meaning the government looks at the combined taxable value of all land held under the same ownership entity, then applies tiered rates. When your combined land value crosses thresholds, the rate can jump sharply. So even if property A barely changes, buying property B can push the combined total into a higher bracket, and the bill jumps. Here's the part many people misunderstand. In commercial leasing, once a lease is signed, the terms are fixed for the lease term. You can't change the land tax clause halfway through. So unless the lease is renewed or renegotiated or amended by agreement, you must stick to the lease conditions. Interest hit. From the tenant's perspective, they're renting the same property. Last year, the land tax was about $4,000. This year, it suddenly looks like 2 or 3 times higher. But that increase is not caused by their property. It's caused by aggregation, because the landlord bought another property and the system combines the values. So yes, the tenant is innocent, and during a fixed lease term, they may not be required to cover the increased amount if the lease doesn't allow it. That's why the landlord can get stuck paying the difference until renewal. While land tax rates 2025-2026. Tier 1. Tier 2. Tier 3. Tier 4. Tier 5. Tier 6. Tier 7. This is why aggregation matters. Once your combined taxable value crosses a tier, the base fee and marginal rate jump. That jump can be dramatic. And on top of the land tax bill, if you can't pay on time, WA charges 12.4% interest per year, calculated daily. That's not a bank loan. That's statutory penalty interest. And it adds up quickly on large assessments. Based on this experience, and after studying how land tax aggregation and tiered rates work in WA, one lesson became very clear to me. Holding multiple commercial properties under a single ownership entity in WA can result in significantly higher land tax outcomes due to aggregation. This doesn't mean it's wrong, but it does mean it needs careful consideration before you scale. Every situation is different. Large companies may intentionally use one entity because it suits operations, accounting, and management. And in many cases, outgoings can be passed on under commercial leases. Smaller owners or family investors might prefer different structures for flexibility, cash flow control, or risk management. There is no one-size-fits-all answer. Different entities also mean extra accounting, compliance, and admin, so it's a trade-off. Our goal here is not to tell anyone what to do. It's to show how WA land tax works in real life, so people can assess their own situation early, before the bill arrives. If you found this useful, share it with someone who owns commercial property in WA, especially anyone planning to buy their second one. This is Aussie Money Rules. We share real numbers, real outcomes, and real lessons.